Hello, everyone, and welcome to Girard's Monthly Market Update. I'm Senior Vice President and Wealth Advisor Jim Jacobson, and with us again today is Chief Investment Officer Tim Chubb. Thank you all for joining. So today we'll review the recent economic data, and then we'll take a peek at what the uptrend looks like as we work our way through the rest of the summer and into the autumn. Tim, right at the tail end of July, a whole slew of economic data points were released, and chief among them was the second quarter GDP, and as expected, it was a whopper of a drop. So help us understand what that number was, as well as the rest of the data that's come out recently.
Absolutely, Jim. Yeah, it really was unprecedented. As you mentioned, the Commerce Department released its first estimate of U.S. GDP in the second quarter, which estimated a decline on an annualized basis of almost 33% in the second quarter, which was more than 3 times the previous record of a quarterly contraction. Obviously underscoring the unprecedented hit that we've seen to the economy from the pandemic, and expect it could take some time for this to be reversed. Unlike other downturns, the biggest hit was actually spending from you and me, the American consumer. Consumption is 2/3 of U.S. GDP, or the goods and services that we produce as a country, where we saw a plunge of about 35%, as most of us were in lockdown for the larger part of March and April. Services consumption was also down significantly, over 43%. Biggest declines coming in healthcare, as a lot of Americans were unable to have elective surgeries like plastic surgery, hips being replaced, knees being replaced, other recreational services, and of course, no spending at bars and restaurants. The good news is, while Americans weren't spending money, real disposable income was accelerating meaningfully, and a lot of that was thanks to the stimulus. We saw a 45% jump in annualized personal savings rate, hitting a record high of about 26%, largely thanks to the money printer down there in Washington, with Congress continuing to support those Americans who are most economically sensitive to the downturn through the extra unemployment insurance that actually was suspended just recently, and we've yet to have any sort of conclusion there. Personal income actually jumped $1 trillion and in June from pre-pandemic levels in February, just going to show the significant support that the average American had seen, and as a result, they're spending money in all different types of ways, which I know we'll get into in a little bit. But it's really important to have these fiscal stimulus packages make their way through Congress and into the hands of the American consumer. The economy was shut down in an unprecedented way during most of the second quarter, which is why we're seeing such a decline in GDP. And to a large extent, the U.S. stock market had priced that in, and now we're starting to see some of the fruits of the stimulus labor and a rosier outlook as the year continues.
So with that said, the second quarter data is now old news, and we are already going forward as the stock market is wont to do. And we know that activity did rebound in May and June, although there was a little bit of a pullback then towards the end of June, with some of the areas kind of reclosing. But nonetheless, third quarter GDP is expected to leap significantly. So, Tim, let's peel back the cover of the future a little bit and see what might be on the horizon.
Great point, Jim. We did see with large parts of the South and also West within the United States start to see cases perk up a little bit. We did see some of the high frequency data start to level off. And so the recovery that we had really coming in large parts of June in particular and early July did start to settle down a little bit as we saw those cases start to get a little bit inflecting higher, I should say, but still nonetheless, with most of the country able to get back to some semblance of normal. Economists are expecting that GDP will jump about 20% in the third quarter, thanks to manufacturing, construction, auto and home sales, all moving back to more normal levels, and in some cases hitting some record levels. It's supposed to tail off a little bit. It's not going to be quite that 20% growth in the fourth quarter of this year. And year over year, as we look at the entirety of 2020, we should see a decline of GDP somewhere in the 6 to 7% range. And that's actually what economists are expecting for GDP next year in the positive direction, especially if we get a vaccine for somewhere in the 6 to 7% range from a year over year growth perspective. The interesting thing from the economic data that I've been looking at recently has been higher personal income levels. As I mentioned, personal income has been $1 trillion higher in June than it was in pre-pandemic. The U.S. Commerce Department reported that consumer spending in May jumped a record 8.5%. Last month, it was 5.6%, putting spending on a really nice trajectory as we come into the third quarter. And some of the high frequency data would suggest that the consumers are paying down debt, are moving about and spending money. But we've also seen some data that they are paying down debt and saving it really well. And so, things like open table restaurant bookings and those sorts of things have been, again, inflecting higher as large parts of the country, again, start to see cases decline a little bit. Obviously, places where consumption is going to be tied to close physical proximity, like transport, live events. I can't go see my beloved Eagles this year, I don't think. Their consumers are boosting spending in other areas. And especially in consumer goods, used car sales are off the charts numbers. So again, I think there's been some changes of behavior with the American consumer. They still continue to spend money. They're just doing it in different ways. And the last thing I'll leave you with, the biggest trend that I've seen really persist as states continue to open up has been e-commerce sales as a percentage of retail sales. The growth that we've seen within the last 90 days is equal to the growth that we saw in the last 10 years. So the consumer is spending money. The economic data continues to improve, largely thanks to stimulus, and we hope to get that new package done soon.
That's really good information to share, Tim. Thank you for your perspective on this. And the key takeaway that sticks with me is how the American economy just continues to simply move forward. It's never linear. It doesn't go in a straight line, and no economy does, frankly. It's more of, as the way I describe to clients, it's more of a 2 steps forward, 1 step back, pause, repeat. And then, of course, anytime there's a pause or a step back, everybody kind of freaks out. But that's where the role of fiscal policy out of Washington and monetary policy out of the Fed, that's their job, is to come in and mitigate those peaks and troughs, to try to keep things from getting a little too high, but also to keep things from being too low too long. So it's 2 steps forward, 1 step back, pause. But the fact is, over the course of time, not overnight, but over the course of time, the American economy does grind forward. So I think it's easy to get caught up in the politics of it. It's easy to get caught up in the weirdness of the cycle. But the long story of the American economy is that it does make tomorrow better. And again, it's not a straight line, but if you look at it 5, 10, 20, 50, 80 years, things do get better over time. So speaking of getting better over time, that's what our job is, to help with you. So I encourage you, our clients, and also prospects, to go to our website, meetgirard.com. That's MEETGIRARD.com. You'll learn more about how we can help you make your tomorrows better, whether it's planning for retirement, planning for a child's or a grandchild's education, or simply unshackling yourself from the burden of investment management. Our team is here to help. Look us up today. We look forward to connecting with you.